November 1st, 2024. Today we had a rally and then a lower high major trend reversal and basically a bear trend that lasted all day. In general, when you get a lower high major trend reversal like we got here, a rally, you can see we got a sell-off, which is a trend line break. So it breaks this trend line. This is a setup, lower high major trend reversals, higher high major trend reversals, all sorts of major trend reversals. You should really spend a lot of time going through because they can be really, really effective setups, especially if you're newer to trading. So you can see here, we have a trend line break and then a wedge bull flag, 1, 2, 3, 4. So there ended up being 4 pushes up. Sorry, a wedge bear flag. So we have a trend line break, a wedge bear flag, and then we have a lower high here. And so a possible major trend reversal. So it's a credible swing sell below 25. The problem with selling below 25 is there's only a 40% chance in general that you're going to get the major trend reversal, 60% chance that you're going to end up getting 2 legs sideways to down. However, that doesn't necessarily mean it's going to go all that far. They could be pretty small and minor legs. So most likely what will happen is you'll get some sort of disappointing follow through and get stopped out. Obviously, that was not the case here. You ended up getting pretty good follow through. Another issue with selling 25 was we hadn't closed below the moving average yet today. That was probably my biggest issue with it. But anyways, bar 1, a bull bar closing near relatively near its high. There is a small tail on the top, but still a good looking bull bar. We're potentially always long after consecutive bear bars yesterday, and then we have a gap up and a strong bull bar closing near its high. 2 consecutive bull bars closing near their highs, so good for the bulls. We're probably going at least a little bit higher. You can see we're breaking out above the high of this trading range yesterday. 3 is 3 straight bull bars. There's probably buyers below 3. It's most likely a bad low 1 short since we have 3 consecutive bull bars, and the gap up acts as a bull bar as well, so expect buyers below. Outside up bar on 4, a bull bar closing relatively near its high, but again, expecting buyers below if we go too much lower. So still 4 bull bars on the open. However, this is not a micro channel. 5, another bull bar. You can see we're starting to stall, right? So it's possibly becoming a parabolic wedge. The first push up is bars 1 and 2. And then we have a pullback on bar 3, a second push up on bar 4, a pullback on bar 5, and then you can see bar 6, as we rallied above it on 7, that became the third leg, and so 7 was a possible parabolic wedge. However, we only traded below bar 3 so far yet today, so while it's an implied 3 legs, really we only have 2 legs up so far with 4, 5, and 1, 2, 3, and then 4, 5, and 6. 6 is a second reversal down. The reason I say that is because 6 is only the second time we've traded below another bar. So yes, it's an implied parabolic wedge, but you have to keep in mind that it's only the second time we've traded below another bar. And we have 6 straight bull bars on the open. Bars 1 through 6 are all bull closes. So although it is a second reversal down, and in theory 6 is slightly higher probability than 3 was, they're both still really low probability trades and thus make really good bars to buy below. 7, a bear bar, a large tail on the bottom though, really not worth doing anything. Again, it's the first bear close today, and we have 6 straight bull bars. So what are you expecting on the close of 7? I'm expecting traders to pretty much buy the close. So buyers around the close of 7, and that causes the big bull bar on 8. 8, a breakout above a parabolic wedge. Good for the bulls. We're probably going at least a little bit higher. However, I'm not sure necessarily how much higher. The bulls are hoping for the breakout to get a measured move up to this area. Same thing in that area, the bar 3 low from Thursday. We had something really interesting happen on Thursday. The open of bar 1 was the high, right? So we didn't trade 1 tick above the high of bar 1, and the open of bar 1 was the high. And that actually remained the high of the day. That only happens about once a year. So really, really interesting that actually ended up remaining the high of the day. That's really, really rare to see. It's a really interesting thing when you get to see that. Because usually, since this is all sampled data, so it's not exact, there's some sort of tail. But I went on the CME futures site, and bar 1, the open was in fact the high. So anyways, bulls get a breakout above on bar 8, and they're hoping for a measured move up of the parabolic wedge. You could argue since, the reversal started here, maybe these highs, maybe we have to go a measured move of that. That's what the measured move ended up being. The reason you would use this tail Again, the reason why some algorithms would use this tail and not this tail is because they can argue that the body is what started the reversal up. And then here, this is as high as we went. So from the open to that high is the measured move up. Now, do you need to get really specific with measured moves? No, not really. What you need to learn is that as we're rallying here, getting the breakout above the parabolic wedge, the size of the bodies is shrinking. So 9 is a smaller body than 8, right? It's still a good looking bull bar, but it shows that the momentum is decreasing and we have tails on the top. 10 is a smaller body than 9. Again, we have shrinking bodies. So while this is still a strong rally for the bulls and a possible buy the close environment, you have to keep in mind that the bodies are shrinking. 11, another shrinking body, a tail on the top, a tail on the bottom. So when you're getting this pattern of shrinking bodies, what usually happens? You get a pullback. So you're getting a pattern of shrinking bodies. What usually happens is you get a pullback. So what is bar 12? Bar 12 is a buy climax. So whenever you get 4 or 5 bodies that are shrinking, and then you get a really large bull bar, that's usually a much more climactic bar. Probably only a 40% chance that buying the close of 12, you're gonna lead to some sort of swing up. Most likely what's going to happen if you buy the close of 12 is you're going to sit through a really deep pullback. So 12 is a really climactic bar due to the fact that 8, 9, 10, 11, all the bodies are shrinking. And then all of a sudden, really big bull bar closing near its high on 12. So it's a buy climax. 13, a bear bar closing near its low. The thing you have to keep in mind about bar 8 through 12 is that it's going to get a second leg up, but you don't know where the second leg up is going to start. When you get a rally as strong as 8 through 12, 30% of the time, the second leg up will start after going below the bar 7 low or the bar 8 low. In this case, we ended up getting around that low and then a rally. A lot of traders know that it usually won't get below that low. So if it gets in the lower third of the leg, somewhere in here, that's where the buy zone is. Keep in mind, this is a possible start of a trading range. So if you're thinking about it from the perspective of a trading range, where is the buy zone in a trading range? The lower third. Where is the sell zone in a trading range? The upper third. So traders see this buy climax and they buy in the lower third of it for a move into the upper third of it. So 13, a bear bar closing near its low. It's a big low 2, low 1 pullback, or quote unquote pullback, but low 1, low 2 on 13. So do you sell below 13? I don't know. I mean, it's probably okay. We're probably going lower. And 12 is a really big buy climax, but you know that it's going to be a minor reversal. So you're not selling below 13. And if I say you shouldn't sell below 13 and look for it to be the high of the day. It was the high of the day, but it's unusual for that to happen. So if you're selling below 13 and you get 14 and 15, it probably makes more sense just to get out of the trade. You have 6, 7, 8 times your true risk, and we're probably going to pull back pretty soon. So if I had sold below 13, it would probably be for a move to the moving average, considering the fact that we have not really touched the moving average yet today, with the exception of bar 1. 14 consecutive bear bars. So bear bar on 13 with a decent close. Follow through on 14. So a large tail on the bottom of 14, but still okay to be short. We're probably still always in long, but we're probably also in a trading range. So right as the market flips to always in short, we're probably going to reverse. 15, 3 consecutive bear bars. 13, 14, 15. Pretty large bear bars and tails on the bottom. So I'm not sure how much further we're going to go. You can see there were traders buying right at the bar, right at the moving average on 15. 16, bull bar closing somewhat near its high, but again, a really large tail. It's more of a doji bar if you think about it. 16 is really just a big doji bar. And after big up and big down, it's probably going to lead to more sideways trading. So no one's buying above 16, expecting the market to race straight up. So double bottom for the bulls, but the bears think that they're going to get a lower high. The bulls now have their higher low. When you get, it's just a really simple way to think about spikes. When you get 8 through 12 and you start to pull back, just in your brain go, we're probably going to get a higher low. Why are we going to get a higher low? Well, think of what I just told you. Only in general about a 30% chance that we're going to come below here before we end up getting a second reversal up. So for the most part, what you can just automatically assume, 70% chance that you're going to get some sort of higher low. When you get 13, 14, and 15, what can you assume? Well, that's strong enough for a second leg. It's probably going to get a lower high. And so when we get the wedge bull flag, you have to be thinking reasonably likely that we get a lower high here, or at least some sort of valid attempt at a lower high, right? So the wedge bear flag, while it was a lower high major trend reversal, it's not a super high probability trade. However, it's reasonable to take the short. So 17, an inside bar. It's a high one buy for the bulls above 17. I probably would not take that. 16 is, the breakout for the bulls, and they're hoping that we're starting a bull trend. But after 13, 14, and 15, it's a little bit less likely that we're doing so. 18, a large bull bar closing near its high. It's good for the bulls. Increased chance that we get at least a small second leg up. We're probably going at least a little bit higher. However, there's something to keep in mind. When you're looking at the close of 18, you're thinking to yourself, okay, well, we had an open gap with the 7 high and the 9 low, and that has now closed. We had an open gap with the 1 high and the 4 low. That's still open. Do you think it's a bull trend day? It's probably not a bull trend day. Why do you think that's probably not a bull trend day? Well, if you look at this, 13, 14, and 15, go look at, your list of bull trend days if you have a bunch of them, or go find a bunch of bull trend days. See how many of them have something that looks like this early in the day. Sometimes you'll get a profit-taking sell-off later in the day, but how many of bull trend days in the first 20 bars have something that looks like this? Very few. And so what you have to be thinking to yourself is, if it's not a bull trend day, what might it be? Well, it might be a trading range day. If it is a trading range day, you have to expect gaps to close. And so you would expect the gap with the 1 high and the 4 low to potentially close at some point. 19 consecutive bull bars. We're probably going at least a little bit higher, but we should pull back first. It's a bad low 1 short. And again, it's not like we're going to go straight up after 13 through 15. So 20, a bear bar, buyers below 19. Some traders tried to buy around the 16 high and the 17 high, but never got filled during 20. 21, a big bull bar, but possibly a second leg up, 18, 19, and then 21. So I'm not sure how much higher we're really going to go here without starting to go sideways. 22, a doji bar. Again, it's a bear close, yes, but it's more of a doji bar. It's a low 2 short for the bears, low 1, pullback, low 2, but I'm really not looking to sell below a bear bar. There's probably more buyers below. 23, you can see buyers below, but if you're buying above 23, the problem is you're buying a third leg up. 1, pullback, 2, pullback, possibly 3. Second. All right. 24, another bull bar. So 23, a doji bar, but again, a high 1, a third leg up. 24, consecutive bull bars, but right at the top of the trading range, really not all that good. 25, as I mentioned, lower high major trend reversal, 60% chance of 2 legs sideways to down, and a 40% chance of a major trend reversal occurring here. 26, consecutive bear bars. So follow through for the bears, but large tail on 25 and tail on 26 as well. We're probably going at least a little bit lower, but not sure how much lower. 27, more follow through for the bears. So a large tail on the top and bottom of 27. The real thing is that we haven't gone below the moving average yet today. We've gone below on tails, but we actually don't have a bear close below the moving average yet today, which is pretty important. So I think when we get 28, yes, 4 straight bear bars. Good for the bears. Really tight channel down, 25, 26, 27, 28. But also the context for the bulls is just, this is possibly going to be a bull flag, right? So you have to keep in mind, this is still the dominant feature of the day. So it's still not super likely that we get some sort of major trend reversal down here. What you have to look at is the fact that 28 is the first close below the moving average. So what should you be thinking about? Well, 29 and 30, in my opinion, do something really important, and that is they don't really trade up. Yes, 29 sold off and then got bought back up, and 30 has a small tail as well. Look at the opens, though. The open of 29, it only went 1 tick up. The open of 30, it never really traded up that much. So if it's so bullish, right, we went 27 closes without a close below the moving average. There should be buyers at the moving average. Most likely, there should be traders pretty eager to buy this close. And then 29, they're not eager to buy it. There's a tail. And then 30, they allow 3 consecutive bear bars closing below the moving average on the first time below the moving average. That shouldn't be happening. If you get 3 consecutive bear bars closing below the moving average after 20 plus bars above the moving average, you have to start to wonder, especially in this case where, the bulls weren't even buying the opens. They really weren't even trying. So you have to start to wonder if we are going to go higher or if we are in fact going to go lower. 31, a bull bar, good for the bulls, but a tail on top. 32, an inside bar. It's a high 1 for the bulls, possibly the bottom of the trading range, but again, probably not worth taking. The channel down from 25 to 30 is really tight. 33 is a low 1 short for the bears. Can you sell the low one? Well, the problem with low ones, as always, is that they usually lead to deeper corrections before they lead to trend resumption. So you could take the short, but you have to be expecting it to lead to a pullback before it leads to resumption. 34 is a double bottom for the bulls. So double bottom 31, 34. However, we're in a tight trading range. We are in an overall possible trading range, so some traders might be looking to buy. For the record, 12 probably should have been tested at some point today. It's unusual, but that's kind of part of the major trend reversal working that wasn't supposed to work, or low probability of it working. When that ends up working, this doesn't get tested. But this is going to be a magnet over the next couple of days. So let's say we gap up into like the middle of this range. We're probably going to try to go back up here. How big was this daily range today? About 50 points, a little over 50 points. Anyways, 34, like I said, double bottom, bull flag, but again, really tight channel down, probably needs a little bit more. 35, a bear bar, but a large tail on the bottom. 36, another bear bar, really big tails on 34 and 35. So when you think of 36, yes, it breaks below 29, which is probably the second leg, but you have to keep in mind 34 goes down and up, 35 goes down and up, and then 36 goes down in a climactic way. It looks kind of like a sort of a parabolic third leg down. So that's why when you get this sort of parabolic third leg, it qualifies as the second leg. In general, once you get, below the low of the leg, so first leg down, pull back, once you get below the low, it possibly qualifies as the second leg. In general, 1 second. 37, big bull bar. So the problem with 37 is a big bar, big risk, and it's testing around the high of the trading range. But again, the big bull bar closing near its high. So some bulls might buy the close, looking for follow through and a wedge bull flag from the rally, the bar 12. And some traders, you can see bears sold the close. Why do they sell the close? Because they know other bears will exit above here. So any bear who is short for any reason, major trend reversal, you sold the close, whatever, you're going to want to exit above 37. It's too big of a bar. However, instead, the bears sold the close, trying not to let the bar trigger, and that's what caused 38, but a large tail on the bottom. 39, a big bear bar closing near its low. So it's possible wedge bull flag 1, 2, 3, and 38 looks like the attempt for the bulls. And then all of a sudden you have a giant bear bar 39. So that's a bit of a problem for the bulls. 40, disappointing follow through, but again, not a giant reversal. So 40 is not going to undo 39. Had 40 gotten a little bigger and closed on its high, that would be a little bit more of an issue for the bulls. However, for the bears. However, 40 doesn't close on its high, so it's really not all that great. 41, an inside bar. It's a low one short for the bears. We're probably going at least a little bit lower. 42, follow through, but again, just a large doji bar. Again, I think that we're going to close this gap, right? You have to be wondering if we're going to get into this area, because the bears who sold above this, in theory, should be able to scale in and make money. So, we're not quite there yet, right? So we're heading down, yes, but I think we're getting to at least the one high before we reverse. Also, something to keep in mind, we closed around the open of the day. And on trading range days, you should automatically be thinking about the open of the day, because the open of the day is going to be a magnet. 43, another inside bar. So 41, an inside bar. 43, an inside bar. We're potentially going at least a little bit lower. And then you can see a sell-off on 44, but it looks really climactic, right? It was spike, 39, pullback, and then bear channel, and a bit of a climactic breakout below the entirety of the bear channel. We have this bear channel line. You can see we got a breakout below on 44. 45, a double bottom, 44, 45. Both bears can exit above 45. We're probably going to bounce for at least 1 to 2 legs sideways to up, but the bear channel down is tight. 46 consecutive bull bars. We're probably going at least a little bit higher, but a large tail on the bottom, the top of the bar. So I don't really know. You also know that if we rally up to the sell climax high, the bar 39 high, they'll probably be sellers. 47, another bull bar, but a large tail. So potentially going at least a little bit higher, but again, not really all that great with how tight down the channel was, and we're at the top of the channel line. 48, another bull bar, but an inside bar, not really that great. Doesn't close all that strong. For me, this is actually, I was actually pretty, happy with myself for what I did in this area. This is a signal in my, like this, I've told you guys about the leg 1, leg 2 thing that I created. And this was a signal today to buy the close of 48. But, the only time that this sort of system, to buy in the first leg for a second leg, I have found, sorry if that was a little loud. The only time I've found it's extremely ineffective is in trading ranges when you have a tight channel down. So tight channel down from 25 to 44, and I did not buy the close of 48, even though I'm supposed to just do what the signal tells me to. But this is one of the instances where it's actually a lot better, I think, to sit out. And if you wanted to, in these kind of areas, in theory, I was looking into a study to buy the low and use a stop and measure move down. You never would have been stopped out, but you would have ended the day with a loss. But buying the low of these signals for a second leg up from them seems to be a more effective strategy if you're going to trade against a tight channel in a trading range. 49, a big bear bar, probably buyers below, scaling in lower, large tail, no tail, but again, let me restart this bar. 49, a big bear bar closing near its low. It's a bear surprise. We're probably going below that low, and we haven't broken out of the 18 bar range yet today. High probability, 80-90% chance that we're going to break out of the 18 bar range in any given day. So you have to expect we're probably going to do that today. 50 consecutive bear bars. We're probably going at least a little bit lower. We do close below the low of the bar 44 low. So if we get follow through, you could sell the close for some sort of measured move down. But you have to keep in mind you're going to sit through a pullback. 51, another bear bar. So we're probably going to get at least another leg sideways to down. 52, disappointing follow through. So bears who sell the close of 51. Disappointed 52. Some will buy back their shorts quickly since we can collapse, but it's okay to just hold your short. Even if we pull back, there's sellers in this area. 53 is potentially just due to bears who sold the close and didn't get immediate follow through buying back their shorts. 54, a bear bar closing near its low, triggering the low one short below 53, but not necessarily a spot where a lot of traders would sell. 55, possibly getting a second reversal up. A pretty big bull bar. However, there's a tail on the top, so a lot of traders not really all that interested in buying. 56, a bear bar, but a tail, but still reasonable to be short. Probably at this point, it's probably okay to have a stop above the 50 high at this point, since it's possibly the start of the channel, or the 53 high, but I usually just keep a wide stop for these situations. 57, another bull bar. So bulls are hoping that it's 3 bear legs down. First leg 51, second leg 54, third leg 56. But I don't really think 57 is going to undo all of that. 58, disappointing, probably buyers below. You can see buyers below. Surprise, 59. So 58 is an outside bar, and 59 is an outside bar. So it's an OO pattern. So you got to figure 60% chance of some kind of measured move up. You got very close here. But again, probably a minor reversal if you really think about it. Yes, the bar is really big. So you have to start separating in your brain context versus bars. So what people do, this is the number one problem, I think, with people who are not profitable yet at trading, is you have a hard time separating the past 5 to 6 bars from the context of the entirety of the day. So yes, it's possibly low in a trading range, but we've been in a bear channel for 40 bars, 35 bars, and even you could argue it started here, since that was a lower high. So we've been getting lower highs and lower lows for 47 bars. Do you think that all of a sudden we're going to get a higher high here? Probably not. So it's probably going to be a minor reversal from 59, and the risk is really large. So traders really don't want to buy above 59 when the risk is large and the reward is limited. They want to buy a pullback. So traders more interested in buying at around 50% during 61. 60, an inside, or not quite an inside bar. So we did trade above 59. A low one short for the bears, but 59 is going to get another leg up. 61, you can see buyers below 60 during 61, and a high one for the bulls. 62 consecutive bull bars. Buyers below 63 buyers below 62 during 63. It's a bad low too short. 64, not quite getting above the moving average yet. 65, bear bar closing near its low. Possibly, the low 2, low 3 short, but not really all that great. Bears are hoping we can't get above the moving average, and it fails. Bulls, basically, the bears are trying to hold the market below the moving average so that the bulls end up giving up and we get a collapse down. You can see here, we actually did this a couple times this week, but you can see here, bears disappointed 66, buy back their short 67, and bears give up 68. But the breakout, this is the breakout attempt 68, and it fails. It ends up just being a third leg up. 1, pullback, 2, pullback, 3. The second leg subdivided into 2 legs. 69, a disappointing doji bar, so not really great follow through, but the bare minimum. 70, you can see buyers below 69, and then once we rally back up to around the close, the remainder of the bulls sold out, causing 71. Any bull who was still long ended up exiting below 71, possible wedge bear flag, and probably back to heading back always in short 72. And then we got follow through to the low of the day. But you can see once we got the low of the day, traders got disappointed and just bought back their shorts because the low of the day was the target. A lot of times when you have an obvious magnet below, so I think, high probability we break out of the 18 bar range. We haven't yet. We're near the low of the day. We're probably going to break out below the low of the day. But the market will often try to trap you out. It'll get, get some sort of wedge bull flag or wedge bear flag before it gets there. On the daily chart, so not really great follow through, right? If you sold the close of this bar and then you get this is follow through, you're probably like, oh, well, that's not really what I wanted to see. And you were selling, hoping to get, hoping for momentum and a collapse. Remember what I said about the closes below the moving average on, hold on. Hopefully it still shows on, okay, over here. This didn't close below the moving average on the non-Globex chart. I just have the Globex chart pulled up because I'm looking at the daily chart. But pretend this did not close below the moving average. The first close below the moving average, bulls should buy it. And instead you get consecutive bear bars also closing below the moving average. Now look at the daily chart. The bulls should buy this bar, and they did, right? It's not a bear follow through bar. So for me, if I'm a bear, I'm disappointed by this. So if we trade back into this area on Monday, we might find disappointed bears buying back shorts, because the reality is we might be forming an upper trading range. And if we do form an upper tight trading range here, right, we have this large bull rally and we form a tight trading range in this upper area, it might be a final flag. And if it is a final flag, it would not be surprising if you get a breakout above, test 6,000, and then that is the end of that trend. And we start to head back into this area, 5,000, 5,200, whatever, this whole area, because again, 6,000 to 5,000. Well, on another chart on this SPY, it looks like a 20% pullback, but 15 to 20% pullback is pretty normal, pretty expected. So I do think we're going back to 5,000 at some point. The weekly chart, consecutive bear bars. If you're a bull, you're obviously not thrilled with these, but it should still be a minor reversal. We'll probably stick it back up into this area. You really don't want to allow the bears to get 3 or 4 bear bars as bear closes. So again, spike, pullback, bull channel, but getting relatively climactic. This looks like a leg in the trading range. I think we're probably coming back to this area at some point. I don't know when. Monthly chart, we got a bear close. So good for the bears that we got a bear close for October. And you can see the bulls are trying to buy the close of the October bar so that a lot of other bulls don't exit below. So they're trying to buy the close and get another leg up here. But, I think we'll probably go below last month's low. I'd be surprised if we kept it above for the whole month. All right, that is it for this